Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Monday the 21st of December. So looking at the markets today, we've seen following a bearish week last week, prices trending lower again today. The key drivers are, number one, we've got, despite an undersupplied gas system, reasonably comfortable fundamentals. Number two, oil prices pushing down to 11-year lows as production activity increases. And finally, number three, warm weather forecasts and healthy wind weighing on the sentiment across the power and gas markets. Those are your key headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at those UK gas fundamentals to start with, as we've said, the temperatures are suppressing demand today, particularly domestic demand, which is just over 170 MCM today. Temperature forecast for the next couple of days at least, and the balance of the month really look well above seasonal normal levels. And even those less reliable forecasts at the start of January suggest that the temperatures will be tracking just above seasonal normal levels. Looking at the demand today though, we're actually seeing quite a bit more than we might have otherwise done from just temperature, as IUK exports remain high, and we're actually also seeing around 8 MCM of storage injections, which is pretty rare for this time of year. Elsewhere on the supply side, we're seeing Norwegian flows and Dutch flows around about the same level as last week. We're also seeing LNG pretty much flat with last week, but we have had a tanker arrive at Southhook over the weekend, and there's another 3 due to dock before the end of the month. So there is the potential for a ramp up in supplies, albeit with low inventories at the moment. There's no need to push that gas out to take on new cargoes. Looking at the power side of things, we've got very comfortable margins, supply margins at this time of the year, nearly 12 gigawatts actually at the moment, and that's largely because of the healthy wind forecast, which, although aren't quite living up to expectations, are still well over 5 gigawatts today, and expected to remain pretty healthy up until about Christmas Day actually. We've also seen the return of Heysham nuclear generator following an outage last week, so supply margins should be pretty comfortable, and it's a really bearish outlook for at least the end of the month. Looking at oil prices, we are seeing 11-year lows, as I mentioned. Brent contracts are trading just above $36 per barrel. That comes as producers around the world continue their battle for market share, with this time the US actually increasing rig counts by 17, which is probably the most significant increase since about July really. So that's going to weigh on sentiment, and as I said, pushing those Brent contracts down, and the spread actually to WTI contracts is now just $2 per barrel. That's it for today. As always, keep in touch with us. We'll have market updates until Wednesday this week, but there might not be too much news as the build up to Christmas sees markets kind of wind down. Have a great day.